Good morning, good afternoon, and of course, good evening, traders from across the globe. I know I promised I'd get in front of the camera tonight, but as you can hear in my voice, I'm still a little under the weather, so we'll just go with one of these shoots tonight, and maybe I'll be able to get in front of that camera tomorrow. So, this video is coming at you on a Tuesday night for trading, Wednesday, May 3rd, 2023. And it's day 2 of a 2-day Fed meeting, Fed decision day. Now, I showed you this chart in last night's video, and I said, listen, when we see a double top, we sell a double top. That's the way it works. Not everyone will work, but 8 out of 10, in my opinion, do. And here's where the market was. And here is what we got today in the NASDAQ. Wow, talk about that, huh? That is working exactly as it should. The double top produced. We had a sell signal right here at the top. A perfect sell signal. To get in the NASDAQ at 13,336. The high was 13,334.75. Within a tick of our price, and it dumped. So perfect call. Even though I didn't take the elevator ride down, it was a very nice call. Hopefully some Omniacs caught that for themselves. Remember, this is a very risky game. Never, ever trade anything without putting your stops in. Put them in first. That's from crypto to fiat to anything in between. Very risky. Put your stops in. So, the NASDAQ, I've mentioned in my live stream earlier today, in the video last night, in tonight's video for tomorrow, that we are at a spot that the Fed obviously knows this, that if they continue to raise rates, we are now going to break the 5% borderline and call it 5.5 to 6, which you could get zero risk return. Imagine taking your money, putting it in bonds and getting 5 to 10% with zero risk, as opposed to all the risk in the world to your portfolio at 7 to 9, maybe 10 to 5% risk. So let's call it 7 to 10%. You could either get 7 to 10% risking all your capital, or get 5 to 6% putting it in safe government bonds. What would you do? We are at that moment where if the Fed raises rates any further past tomorrow, Wednesday they will raise rates, or today this video is for. If they continue past that, I think what you've seen here will just get worse, because it makes too much sense to get your money out of a risky stock market and put it into a non-risk bond market if the difference in return isn't all that much greater. So watch out what the Fed does. Not this meeting tomorrow. We know they're raising. Past that, they continue to raise. I think they start to punch a hole in this very strong market that we've been in. So that's your NASDAQ. And let's go look at another chart here. Remember in last night's video, I showed you this chart and said, look, too much traffic up here. I'm sorry, that's just too much traffic. And the market will likely fail, so we're going to take a short position. I mentioned that in last night's video. Look at the amount of traffic up here on the Dow Jones. Could not get through this area every time. Hits it on Monday, we expect drop on Tuesday, and this is what occurs on Tuesday. Right, very good. That's analysis telling you what's coming next. Now, what we have on here is a little note. Subscribe to my channel if you don't mind, because the next chart I think you're going to love. So subscribe to my YouTube channel and make sure that you're aware of these videos as they come out. There's one almost every evening. The next chart I think you're really going to appreciate. Watch this one. This is the YM, right? Simple, the mini Dow, but very telling in some ways. Watch this. So you've had the mini Dow run up and create the beginning of this resistance line. Here it forms for sure. We extend it out. And when we get back to it, you hit it again and fail. Okay? And this was Fed meeting day 1, that big failure drop. If you ask me, what happened is the market had this tremendous rally into Fed day. So the day before Fed day, profits came. That's what I think. They took some profits here. All right. Why does this chart seem different than the others? Watch this little clue I found I want to show you. look at this average and look what happens. It holds the average here. In fact, let me grab this little circle. Hold your average. Holds. Holds. The fourth hold, after that, boom, you break the average, hence the red rectangle, and down we go. Well, here we are. Hold 1, hold instance 2, hold instance 3, hold instance 4. Are we putting a red rectangle here? If it does not hold here, the YM, this average, and the daily YM shows us that some damage will be done. So we need to hold here. Hopefully the Fed will raise rates tomorrow, and then in their speech, whatever they mentioned in their comments, we'll talk about a pause, and if that's the case, we go straight back up and the average holds. If they talk about possibly raising further, down we will go, and that rectangle will sit there. Right now, I'm not going to put it there. I'm not going to tell the market what it will do. I always listen to a market, and it tells me what's coming next. I do know that it holds this average. Hold, 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 hold. On a fifth try, it gets a little scary. Hold, 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 hold. Let's hope we don't get a fifth try tomorrow. All right, so we'll leave the rectangle out of there for now. We'll just keep it in mind. And that is what I wanted to show you. Keep that in mind. Remember, if the Fed keeps raising rates past tomorrow, there'll be a lot more bars that look like this. Hopefully the Fed knows this, and we'll go into some sort of pausing stance. We will find that out tomorrow. Thank you for tuning in. Make sure you subscribe to my videos. Come join me tomorrow. We will hang out together during these rough and tumble markets in my live trading room. It is free to you. No credit cards are required. So come down to livewithoscar.com, and then remember, stops are in. Emotions are out. Thank you so much for tuning in. I will see you all in my live trading room, and we'll watch what the Fed does tomorrow at livewithoscar.com.